guys, we are at the highlight of the evening. Can I please get my last panel on the stage? So Danielle is with Next 176, who's part of the Old Mutual stable. They're a very interesting new venture fund. It'll maybe tell you a little bit about before he gets his panel up. But Gideon, Andrea, Laurie, can we all get you guys on the stage? And then you can maybe also you guys might have to do your own introductions. Yeah, you have such interesting backstories. Guys, we're very lucky to have this caliber of investors here with us tonight. Have fun.
Thank you. A lot of pressure coming from that introduction, so hopefully we match the expectations, but really glad to be here tonight and see so many familiar faces, but also some new faces, which is always good in such a small ecosystem. So my name is Danielle. I'm here from Next 176, and we'll be in charge of posting some questions to our panelists this evening. I'm part of Next 176. And Next 176 is a 100% owned subsidiary of Old Mutual. It was set up outside of the core business as a corporate venture capital team investing into startups to think about the next 176 years of Old Mutual. Some of the faces in this room today we're actually speaking to about investing into. I won't name any names, but if you see big smiles, it's probably those guys. So I'll pass over to our panelists one at a time. Maybe you guys can just give us a sense of the fund you're from, what you do over there, and then a brief background on yourself, and then we can dive into some questions.
Cool, yeah, thanks, Daniel. So my name is Gideon Greaves. I'm the Managing Director of CVVC Africa. We're a Swiss-based venture capital firm that focuses on investing in startups that utilize blockchain. We launched in Africa in July 2021, so it's a $20 million fund, and we invest from South Africa to Egypt, 10 portfolio companies so far in our journey, and 3 from South Africa. I was very excited to hear about the topic tonight from Lo. I've been on both sides of the table. Now being on the VC side, I've seen so many things that I wish I knew being on the other side, things I should have done to my pitch deck, the narrative I should have been selling, and I think if I had another crack at it, I could create a pretty great narrative to raise some cash. But yeah, happy to be here, guys, and looking forward to having this chat.
I'm not sure if this one works. No, it does work. Cool. Yeah, my name is Andrea Beaumont. I am a partner at Knife Capital. So Knife Capital. Venture capital sounds quite dangerous. It is dangerous. No, but yeah, venture capital fund active since 2010, so it's been around for quite a while. We invest in technology companies, normally starting at about 10 million rand investment and go up now to about $5 million. So quite a wide range. Yeah, and for me, it's really one of my personal ambitions. As you can hear from the accent, it's not South African, it's German. But for me, it's really trying to kind of go and prove that South African technology can really kind of compete on a global level. So if I can kind of go and get the picture of a South African entrepreneur that I kind of been part of the journey of onto the cover of a magazine in a positive way, not in a negative way, of course, then I think I've done my job. So it's really about kind of dealing with all those perceptions around Africa and technology. Can it work? Can't it work? And that's really a little bit my mission, to kind of prove to everybody that absolutely companies in South Africa can do it, can compete globally.
Thanks. As you probably noticed, I'm not Natalie Colby. My name's Laurie Clark. I'm Chief of Staff at Notion 22. Notion 22, we're a Pan-African late-stage venture capital fund. We are raising a total of $200 million US. We have raised $160 million to date and are actively deploying. In terms of the type of investments we're looking for, we're really looking at tech-enabled businesses across sub-Saharan Africa, primarily in the markets that we have a presence. So we have team members in South Africa, Nigeria, Kenya, and also Ghana. And we do invest slightly later. So we invest typically from Series A to Series C, tickets typically $2 to $10 million. And we really want to position ourselves as that local partner for companies that get to this stage. We don't necessarily want them to have to go to Europe or to Silicon Valley for funding. We want to position ourselves as a partner in Africa that can help them expand across the continent.
Next question.
Sorry, yeah, my mic needed a degree basically to get it working again. So, Gideon, I mean, you speak about being on both sides of the table. I think one of the things that's quite prevalent now is we've gone from a proverbial handful of VCs to tons of VCs active on the continent. What would your advice be to founders who are out there looking for capital, and what are some of the things they should be looking for in a VC when going to the market?
Yeah, it's a great question. I could talk about that for quite a while, so I probably won't get all my thoughts out now, but I think the one really important part for all founders to know, so first of all, as a founder, you know your customer really, really well, right? You know your product really, really well. You have to. As a VC, our customer is our investors and our LPs, and our product is our startups. There's another spin-off in terms of who your customer is as a startup founder, right? And it is your VC. And what I find is that a lot of founders that we engage with don't understand the venture capital model and don't understand exactly what VCs are looking for. The other thing is that we also get approached quite often by SMEs. And loosely using that term, because you could argue that a startup is, a business that has the potential to 100x and become a unicorn, where an SME could be a mom and shop paint store that does very well, but it's not going to have a liquidity event for someone like a VC. So what we find quite often is, we're very early stage, right? We have an accelerator and we do direct investments, pre-seed and seed. So we might look for very different things to what Norskin might look for. One of them is quality founders that are emotionally attached to what they're doing. They don't have any other side hustles. The success of their product would speak to who they are as a person. We want them to at least have that mindset, because that means that they're able to pivot and persevere if things go wrong. So sometimes we're not fully convinced about the business model, but we back the jockey. So I think bringing that point across as a founder is really important. The other part that we look at is that hockey stick that everyone talks about when you're looking at forecasts. We have to see the hockey stick. If you were conservative and it looked like the Bitcoin graph, then it's not something that we're interested in. In fact, we actually spoke to I took a startup to our IC recently, and before we took this startup to our investment committee, the founder had obviously shared the forecasts with me, and they were very conservative. But I knew that she was fantastic to take this business to the next level. I knew the idea and was great. But that was dangerous, because if I didn't have that foresight to tell her to make that change, our investment committee would have said no. It doesn't matter a lot about the ridiculous assumptions that you make. We just want to know that you have the vision to take this from $1 million, $2 million company that it is when we invest to $250 million company at least. 2x doesn't make sense for us. We got to have these 100x opportunities. And we need to see that you're the type of founder that believes you can scale very quickly, because our product is that we need to exit in 8 years, which means you have to have the vision to increase sales or users or merchants at a rapid pace, which also means that you have to raise a lot of capital. And sometimes we meet with founders that only say, oh, this is the only time we're going to raise, it's going to be $2 million, and that's it. Unfortunately, there's other startups in the market that will raise a lot more capital, which will give them the power and the resources to grow and create that liquidity event that a VC is looking for after 8 years. So in summary, I think what I'm saying is really trying to understand the VC and what they're looking for, and then you can start speaking their language, and it makes that pitching process a lot easier. In terms of what founders should look for in a VC, I think it goes without saying, if you can strategically look for someone on your cap table that can add value, help you raise more capital, open up doors, that goes without saying. I think that's the norm for most.
Thanks, Gideon. So, you spoke about some of the harder issues. You also mentioned the IC, and I think VCs often tell you about this. We're going into IC next week, and you think about it as this sort of mystical environment. And Dario, my question is to you, maybe give us a little bit of a sense of, what goes on in an IC? What are some of the softer issues you talk about? What are some of the things that people are really diving into at that level where the decision is being made?
Sure. I think one of the things that a lot of entrepreneurs really don't understand is that as a VC, as an angel investor, it's different. But as a VC, I'm a custodian of somebody else's money. It's not my money. I have a mandate. I have been told to bring a certain return, and that's what I'm being held accountable for. And equally so, while it is risk capital, so if some uncontrollable events happen, I'm forgiven because it's uncontrollable. If COVID happens, or, I mean, all those kind of things, if the markets totally collapse, I mean, there are certain things, that's fine. When it comes to the controllable events, if I haven't done my homework, if I haven't done a proper due diligence, if I have just looked at an entrepreneur and saying, you know what, I like you, I'll give you the money, and then something goes wrong, it impacts my wealth creation, it impacts the credibility that I have with my investment committee and my LPs, and it impacts my ability to raise the next fund. So, as investors, we quite often, we call it fall in love with a deal. You kind of go and spend a lot of time with the entrepreneurs. You actually want to do the deal. You see the weaknesses, but you really want to kind of go and do this. So the investment committee is this terrible dragon who is absolutely not emotionally involved. They normally haven't met the entrepreneur. We have to present them an investment case. They look at it, and they look at it ice cold from the perspective of, does that fit the mandate? Is that helping us to achieve what our LPs want us to kind of go and do? And can we add value? I mean, they've got certain criteria. And so when we kind of go and start pitching to this investment committee, we have to sell the company. And quite often they ask some nasty questions. And when I say nasty, it's like, well, they actually find this little, well, is this cash flow long enough? Can this done? Whatever. Have you really kind of look at competitive differentiators? And we need to kind of go and fight for the companies. And it's quite interesting. I sometimes find myself fighting more or fighting less. And when I kind of fight less and also know that there's something kind of internally wrong, actually, maybe I don't actually really want, I'm not that convinced of all of this. But our investment committee is definitely this bridge between the entrepreneur and us really building a long-term relationship, and the source of the funding and making sure that we really kind of go and deploy it in the right way. And it's sometimes quite tough. I mean, if entrepreneurs think it's raising money is hard, I can tell you going through an investment committee is, you turn grey quite often. It's not always fun, yeah.
I like that you mentioned that it's long-term capital. A lot of people forget, especially because you're just trying to get the transaction over the line, that actually this is, on the continent now, typically a 7 to 10 year relationship that you're entering with somebody, and you really want to be aligned with people. Lordy, maybe you can speak a bit about that. You know, how does it differ in this type of long-term transaction? What are some of the things that you would look for as opposed to somebody who's, you know, entering into a short-term deal that might only sort of last maximum a year?
Yeah, no, I'd echo that. I think what's really important is this is a partnership, is how we view it as. This is a long-term relationship. And it's a partnership, and like any long-term relationship or partnership, trust is paramount. And it's important to start building trust from the get-go. How do you do that? A lot of the time it's about transparency and honesty, like it is in any relationship. It's really important to recognize the challenges in your business. Starting a business and growing it is really difficult, and we know that. So it's really important to be upfront about the challenges, about the speed bumps, because we don't want to get surprises down the way. We've got investment committees to go to. We don't want to be blindfolded. If you're upfront with us from the beginning, it really helps build credibility and trust going forward. Be honest about your competitors. Obviously, talk about the weaknesses and why you're so much better, but recognize their strengths. It shows us that you've done your homework, you understand your market, you understand your competitors, and really builds credibility. And on this transparency point, I think it's also important that it goes both ways. People in our shoes as well, as investors, it's important for us to be transparent. It's important for us to give you clarity on our investment process, what the hurdles might be as well. So it is a two-way street. I think another element that's also quite important is if you're going to talk the talk, walk the walk as well. These relationships are long-term. We'll typically start speaking to investors or companies a long time before we invest. And if you say you're going to do something, it's great when you do it. If you've got a target to hit, if you've got a product that you're going to launch and you do it on time, that's a fantastic way to actively build credibility very easily. Obviously, stuff happens, and there can obviously be circumstances that stop that happening, but don't make it a habit, because we want to have faith that you're going to hit your numbers so that we can go to RICs and present it with confidence. I think ultimately this is a personal business. Relationships are important, and I think especially what's going on in the market at the moment, it's tough, and relationships are even more important, especially as we're building these long-term relationships.
Yeah, I think we should all go and study psychology and maybe theater or something like this. I think acting, I think that would be the right technique. But the one thing I want to go and add to this, when it comes to this trust and the relationship, choosing the right investor or going into this investor-investee relationship is a 10-year journey. Now, if you're going to go and start thinking about who were you 10 years ago, now all of you have changed in the last 10 years. And if you're going to go and choose an investor today, you will be different in 10 years. Now, think about how many relationships have you had in your life that have lasted 10 years. People joke about this. In good times and in bad times, till exit takes us apart. There is some truth to it. I mean, the big point is, if you choose the wrong partner and not understand that that partner will change over those next 10 years, you need to walk that journey. The person we invest in today is not going to be the person we are going to walk the journey within 5 years' time. Life has taken its toll, and so the other way around. So do not take this decision lightly, and really just take it from there, because if this relationship kind of breaks, it could break your business.
Yeah, Laurie, I think what's valuable what you're saying, sort of, especially in these times, I mean, and today is hinting to that now, in the good and the bad. We're in a period now where, Africa was the only sort of region in venture capital to show growth last year. Everywhere else we saw a decline. You guys see, what's dominating in the headlines. We got another repo rate increase today, which my budget is really not happy about as a homeowner. But speak a little bit about that, Gideon. How does this environment impact you as a VC and impact the deals that you are doing? And maybe speak a little bit about how does it impact, the way you look at the founder? Does that change in these times?
Yeah, I mean, I think the big point that I'm getting across from your question is the circumstances of Africa. How does that play out, right? And for us, as I mentioned earlier, the customer product analogy of our investors and our LPs being being our customers, we spend a lot of time looking at startups, and then we spend a lot of time raising capital. And our thesis is based on the fact that a lot of developed markets want to diversify into an emerging market, and Africa is that next emerging market. But then there's all the other stuff that comes along with it, right? So half the time we're trying to convince people that blockchain is the next technology to invest in. That's probably about 10% of the time that we're doing our convincing, because if they take the meeting, they're relatively convinced. The other 90% is convincing them on the market, and as we all know, there's a lot of political challenges, but those challenges also present opportunities for very disruptive products, to penetrate the market, and that's why Nigeria is kicking our ass in terms of South African innovation, because they have a lot of problems there, and they don't have a plan B. South Africans are a bit lazy, at least the higher LSM portion of this country. If you mess up in Nigeria, there's no plan B, which is why when I visit my counterparts in Switzerland, they're quite cushy over there. African mentality is like hustle or nothing. We've got the highest entrepreneurship rate in the world, actually. African Development Bank did a report, 22% of working age Africans own their own business, and that's because they have to. So I think in summary, it presents both an opportunity and a lot of hard questions for us to answer about the market, where we see it going. Is there's no doubt that Africa is going to work out. Is it now, or is it in 2 years' time, 3 years' time? Have we hit the market at the right time? A lot of the data says yes, but we get a lot of those types of questions.
No, agreed. I mean, some people speak to the fact that on the continent we innovate out of necessity and not necessarily out of luxury. So that's one of the big sort of nuances between us and, call it, North America or Europe. But Andrea, I'm quite interested. I mean, you are German, you came down here, you got into VC. Why not just do VC in Europe? What brought you to the continent?
Good question. No. I mean, first of all, the grass is always greener on the other side. I mean, it's of course, it's a very, very easy thing to do, but I just see the opportunities here. For me, in Germany, in Europe, a lot of things are so regulated that you can't really go and innovate, that you can't really go, you also can't break boundaries. It's like here, you know, you can actually, you can try shit, you can do things. I mean, you can actually kind of go and do it, and ask for forgiveness later. And I think innovation, no, but innovation, so first of all, I mean, we've got enough problems so that we are not shy of problems to solve, first of all. Then I think the frame of reference that we have here is different, because we need to kind of go and factor in, do I actually have Wi-Fi? Do I have electricity? Do I have this? Do I have that? It's like, but by questioning assumptions that in other countries they don't even question, we come up with totally different ways to do things. And I think that actually makes us different. That makes it special. And actually, I think through this, we actually have a competitive advantage, because, as I said, our frame of reference is different. And it just gives a slightly different edge to kind of innovation. I mean, plus the weather is great, the wine is great, the food is great. No, but seriously, I mean, I go to Silicon Valley, and I kind of go and have those startups that pitch this dog color that turns green when your dog has just had whatever, and I'm like, and they actually get funding, and they get funding like millions thrown at it, and I'm like, you're not really solving a problem. This is just so useless. And for me, this is really what this is about here. I mean, we are solving problems, and we are showing the world that we can do it, and we can do it differently, and that's what I love.
And it's less personal, right, in those developed markets like the US, because there's 100 investors on your cap table.
Yeah, it's all of this, and it's just about money, and it's spray and pray, and every investor kind of go and puts in $20,000, and if you make it, that's fine. If not, so what? And okay, so you've got this dog collar that kind of turns out, or that kind of responds to your kind of whistle. Oh wow! I mean, is there a market for it? Shows. Let's throw money at it. I mean, no, sorry, it's just no. No. So the day that you can find that Knife Capital has invested in a dog collar that whistles or turns green or blue, I'm out. I mean, then you know, then the time has come for me to go and go somewhere else. That's for sure.
No, look, I mean, you joke about that, but I think it's
I'm serious.
It's been quite funny also seeing overseas investors talk about the return to fundamentals, and when you think about profitability, and actually for a lot of African investors, they're talking about that from day one. The appetite for losses are not really the same here. People want to see a revenue model quite early on. They want to know what your path to profitability is actually looking like. So going in with the same mindset that you think you're seeing in sort of Silicon Valley, and going to speak to a VC like that is not necessarily going to see you succeed in this market over here. Laurie, maybe speak to some, I'm speaking to differences cross-continentally, but maybe you guys invest across the continent. What are some of the differences you're seeing between South African founders versus some of the differences you might see further north?
Yeah, look, I think there are differences that we see, specifically in South Africa compared to the rest of the continent. For example, in terms of expansion goals, in South Africa we see the real aim a lot of the time is to go to Europe, to go to the US, and that's a good investment move as well. You have this local currency base and you're earning hard currency, we can see the value in that. Whereas our kind of Kenyan team and our Nigerian team, it's a lot more into market. maybe they have higher opportunities to solve there, or they just don't see the need to go. They're trying to solve maybe to some degree more localized African problems to some degree that they can see in Kenya or they can see in Nigeria or Ghana as well. Whereas a lot of the South African entrepreneurs we speak to as well are actually maybe slightly more technical SaaS products that they're looking to sell to enterprises, and it's problems that they have in the US and Europe as well. That's where maybe one of the fundamental differences I think we see.
Got you. So I just got the 1 minute flasher, but
Can I make a comment on that?
go for it.
I mean, the other point that we see is that, I did all your comments. The other one is that, we believe also there's this sort of arbitrage opportunity in Africa because there's limited access to capital in that early stage environment. Most VC capital that's flowing to the continent is from bigger international VCs. Because they don't have boots on the ground and because they look at the market in a sort of mitigated risk sort of way. They're only investing in those validated growth rounds, which gives opportunity for those new opportunity for investors like us that are doing pre-seed and seed. With that being said, South African startups, the point I wanted to make is it's always very high valuations, founders and MVP and nothing else. In Nigeria, for example, at a couple of startups we have there, they have bootstrapped, they have revenue, they have users, they have employees. I mean, the one startup, we were the first money into their business. They had 16 employees in Ghana. Another one in Nigeria, they had 9 employees. South Africans, we're like the southern tip of Europe. We've got these crazy valuations. It doesn't make sense for the market. If you look at companies like Yoko and Ozo, awesome ideas, haven't managed to scale outside of South Africa, which is to your point about being in that part of the continent, those entrepreneurs are thinking, how can we scale across the continent very quickly, not just how can we stay in South Africa and maybe try and go to Australia or the UK.
Thanks, Gideon. So maybe a couple of things I personally will take from this. Our still mentality in South Africa could be improved. Maybe we can think a bit about that and work on that. Think about your relationship with a VC as a long-term relationship. It's about trust, it's about investing for the future, and it's about making sure that you can actually sit across from the table from this person in 10 years' time. And then finally, if you find yourself founding a dark-collar business, it's time to pull out. Thanks.
Thanks.